All right, so coming into the market today, price was a little bit tricky for me. This trade was a little bit more complex, but I'll go over the entire narrative that I had for gold and then break down the trade, show you how I got my entry. So looking at the monthly time frame, you can see that we had price reach a new all-time high by taking out a previous month swing high here. After taking out this high, I was expecting gold to pull back just to give us some selling pressure and some profit taking. And I was looking for price to enter a daily imbalance here. So if you look at the daily chart, you can see right here, there is a daily imbalance that was formed and confirmed on Wednesday. And I was expecting Thursday to sell off into that, heading towards 2420. I was telling my group that's where I wanted to short down into, and I'll put that screenshot here on the left. But that was my overall narrative as to why price might go from external to internal. Even though that did not happen, I still was able to get a trade, and that's what I want to break down for you right now. So we'll head over to the 4-hour. So here on the 4-hour chart, there were a couple things that I noticed. The first thing was I saw that we actually already tried to reach into this bullish argument for higher prices here with this up close candle. This candle's low reaches into this 4-hour bullish imbalance. Yes, we do get some follow through, but we don't expand higher with a new gap. So I'll draw that out. This was actually just a liquidity run. After taking out that liquidity, we can see that price shifts lower, taking out structure, and it leaves us with a new bearish gap. This was what I assumed price would use to get us down into the external liquidity on the 4-hour as well as that daily imbalance. So this line here represents both the daily imbalance and the 4-hour external liquidity. So going from internal to external. Okay. So for today, we had unemployment claims at 8:30. So let's take a look at the 1-hour chart and I'll show you what I saw from there and how I actually got into this trade after news. Here on the 1-hour chart, there's a couple things happening here. You can see that price is going into our 4-hour imbalance, but if you look right above this area, we have a 1-hour gap. And this is something that's really important to take note of, because if you look at this, price starts to bounce between a lot of 1-hour PD arrays. So look, price comes in here with a swing high, and then we reject and enter into an opposing imbalance here. From here, we respect this imbalance and push higher, going above the swing high that first entered our sell side gap. So a lot of back and forth is going on in here, and this can make it very easy to lose track of price. But remember, this overall trade idea is based off of a 4-hour imbalance holding. Okay, I'm trying to sell out of this 4-hour bearish imbalance. Okay, as we look at price going higher, we get a bearish sharp turn. So we have a gap going above this swing high, and then we turn around and get a bearish gap going back below this swing high. This became the area that I was looking to take a sell from prior or after news. It really depended on the price action, but I was really looking to get into the trade after news. So let's go down to the 15-minute and I'll show you what that price action looked like. All right, so here we are on the 15-minute, and I want to make some things visible to you. So you see this high right here, this swing high is the low of the H1 gap. So I'm just going to place a price tag there so you can see that for reference. Price needs to get above this amount in order to be inside the gap. So 2467.77. But as you can see, inside of this H1 gap, we also have two 15-minute gaps. This is why I decided to wait until news hit, so I could see if price wanted to continue going higher into one of these before reversing and going lower. So I'll mark out one of those, and now we can watch the delivery leading into news. Okay, right here you can see that price makes a swing high. Well, not a confirmed swing high, just a high. But if you look at this high, it is the exact same price as this high here. So let me show you that. You can see that these are equal highs. And so I didn't want to sell prematurely. I wanted to wait until price went above these highs and went inside that H1 gap before I even thought about taking a sell. You can see right here, we did reach into both the 1 hour and the 15-minute gap, and we'll break this down on the 1 minute and I'll show you how I got my entry. So here on the 1 minute, prior to news, I can see that the 1 minute time frame created an imbalance for us to push higher from. This is the imbalance that pushed price into that 15-minute gap. From here, I'm looking for a few types of entry patterns. I want to see something like a bearish breaker, a new sell side imbalance, or some type of bearish sharp turn. Any one of those three will be more than enough confluence for me to enter from. So I'll hit play and I'll show you what I saw. Okay, so from here, I could have definitely sold on this gap, but the reason I didn't was because of what I saw on the 5 minute. On the 5 minute, I was anticipating this down close candle to support price. I needed this to break first. So I wanted to see a candle close below this down close candle before I thought about taking a sell. At the time I was looking at the 1 minute, that wasn't the case. We were still a bit above, so I did not take this gap. So I'll show you what happens next. Price ends up turning around and taking out the high that was inside of this imbalance. From there, we ended up displacing lower, and this gap right here, instead of waiting for price to come back into this new imbalance and going short, I actually entered short on the creation of the gap itself. So the moment that this small body candle closed, I just went short and put my stop above the swing high, targeting that 4-hour external liquidity. So from the 5 minute, this is what that trade looked like. And again, the reason for this trade is because I'm expecting a 4-hour sell side imbalance to hold, which means I'm looking to go from internal to a 4-hour external. All right, back on the 1 minute, this low represents the 1-hour external liquidity. In my recording, I actually typed it out wrong. I had it as the 4-hour, but this swing low right here represents the corresponding low to this H1 sell side imbalance. So in order for me to feel good about my sell trade, the first thing I want to see is this low taken out with displacement. So let's see what happens. Everything is looking good so far for my trade. After I see a little bit of sell pressure, I move up to the 5 minute. As price is dropping, I'm just watching swing lows from the left side of the chart. I want to see those stay taken out. Price starts to pull back here a little bit, but I'm not too concerned. Like I said, I'm really confident about this 4-hour gap holding after the price action that I've seen. So let's see what happens after that. After I started getting some really big displacement, I start looking at these swing lows over here to the left, just waiting to see if we can get below them. But price hits an area where it seemed like it wanted to turn around. On the 5 minute, I can see that we had this imbalance here. What I really like about this gap is that it's a 5 minute gap that was formed through an H1 low. So after hitting the H1 external liquidity, we have a 5 minute gap that formed right through it. This is really bearish. Like normally this is an extremely bearish signature, but I already had it in my mind that if price was to turn around, I don't mind getting surgical and finding an entry on the other side. I really didn't want to, but if it came down to it, I would do it. It's just that when you're trying to take the other side of a trade, sometimes it can be very draining trying to find an entry. But I was already getting myself in the mindset to do it, despite how I felt at the time. If I needed to really get surgical and start looking at the lower time frames, I could do it. So as price went back into this 5 minute gap, I did not take another entry here. I was looking for this to hold. All right, you can see here we have the first candle that went into the gap, respected, great. But the next candle actually closes inside of my 5 minute area. This is the first sign of failure. Okay, now here's the thing, I'm still in this short position. The first thing I was looking at was if price closed above this first bearish candle right here. If price closes above this, then I will turn around and look for a long. So I will look at this entire area as a bullish breaker. All right, because it's completely breaking my structure if it happens. So as I hit play, we'll see what happens. Instead of following through, right? Because remember, we're looking at a bearish 5 minute gap. Instead of following through lower on this down close candle, it ends up being a small body bearish candle. This is a signature right before failure. So again, take a look at what happens. The first candle that goes into this gap respects it. The second candle disrespects my gap. The third candle has an opportunity to go lower, but it doesn't. And then right after that, boom, complete disrespect, violating the gap entirely. And what I ended up doing was putting a long right on this line. I did not wait for a new gap to form. I wanted an entry as soon as possible on this bullish breaker. So I'll show you that. When I placed my limit, I'm sorry, it was not a limit, it was definitely a market, but when I placed my market order, my stop was below this bullish candle, and all I wanted to target was the high that went into my H1 gap from news right here. And just to clarify, I did not let the first trade go against me completely. As soon as we went above this high on the 1 minute, I went ahead and closed out of that position in a very small profit, and I was already ready to buy on the other side. So let's drop down to the 1 minute and I'll show you that entry. Here on the 1 minute, there was a gap here for me. So I ended up getting in on this gap right here, and my stop was below this swing low. And I'll show you how that turned out. So I do get triggered into the trade, and again, I'm targeting that H1 gap, but here's the context for this buy trade. Let me go back to the 5 minute and I'll show you this again. On the 5 minute, we had that sell side gap that I was looking to hold. After disrespecting it completely, this becomes a bullish breaker. Now, if I'm looking at a bullish breaker, what you want to pay attention to are the down close candles. These 3 candles right here. These 3 candles should support price higher. But if that's the case, you want to make sure your stop loss is in a safe place. Look at where my stop is in comparison to these 3 down close candles. Price can come all the way back down here and still go higher. So where my stop is, it's not safe, all right? And that's exactly what I ended up encountering in this buy position. I ended up getting stopped out prematurely to the target and had to find a whole new entry. So I'll show you that here on the 1 minute. So remember, I'm entering right off of that line. All these down close candles are the 3 that I showed you on the 5 minute, and watch what happens. Before going to the target, price stops me out. So now I'm stuck looking for a whole new entry. I didn't panic. I was very patient, and I just waited for the 5 minute to set up again. So what I'm looking at are these down close candles. Whenever I see a bunch of down close candles going against price when it's on its way to a target, I'm looking for that to be a new bullish breaker. So this is what happens next. Right here, price shifts against these down close candles. It's a lot easier to see on the 5 minute, but I will show you that as well. You can see it right here. So just for reference, these are the set of down close candles I'm looking to support price. This right here is the new set of down close candles, right? And why do I say new set? If you look here, we've got these 2 down close candles taking out a prior swing low, and then we shift against it, closing bullish. This is a new bullish breaker, and I ended up taking a buy here after just getting stopped out. And this time I actually put my stop in a proper place. If I go back down to the 1 minute, this time my stop was on the bodies of these 2 candles here, not the lowest ones, but right here. And I was targeting the exact same high that went inside of my H1 gap at news. Now, if you take a look, there was a gap for me because when I set this trade up, I was looking at 1.8R. You can see that here, about 1.86. And I was really trying to go after 2 so I could make up the loss and then make a little more on the other side. So I ended up putting the entry right on this 1 minute gap, and that would have gotten me 2.4. And here's how that trade turned out. Price gets me into the trade, expands quickly. After hitting that high, I closed and I did not stick around for the retracement. I understand that price did retrace. I did look at price after, but that was my trade for news. I was totally trying to go short. Price didn't want to go short yet, so I just flowed and I took my trades based off of the liquidity pools present. But that's how my trade went for July 18th.